perhaps 38.86. This would mean that our SPX on SPX, our price target 38.50 is getting tested right now. That I left in my note last evening. That 38.50, around 38.48, 38.50 will get tested, and that's what exactly is happening. Because SPX is 30 points behind, roughly 30 points behind ES, right? So if it's hitting 38.80, the SPX should be roughly hitting 38.50. So that's what is happening right now. So very likely it'll run up into resistance right about 38.84 to 38.87 area. And I mean, here you can see that it is running into resistance, and there is more room to the upside, probably 39.19, somewhere about there. But still, this doesn't give you the cause. Even this chart doesn't give you a cause, and it is bouncing here because of the technicals we have right about here, and the Williams are here. Even on the regular candles, we still have the RSI bouncing from the bottom. Fair enough. All this is good, and it. I was expecting it to hit this line right here, 37.80 around that. So that would be 37.50 around on SPX, but did not happen. But there was that expectation that it would come down, hit this number, then bounce. That would have been a more meaningful bounce. But fair enough. 37, I think 37.96, somewhere about there. Yesterday we bounced there. Fair enough. So keep an eye to the downside on this number, right? 37.82. Now, why was I looking forward for that 37.80, sorry, 38.80? Because of this line here, right? This line, the black line, the 50 MA on the day. This was the expectation for it to go hit this number, 38.80, 38.87 number, and if that clears, this should act as resistance, and which it is doing right now. But I'm still thinking it will go up all the way here, 38.80, 38.90, and if that clears, obviously it's going to hit this number right here and take a breather, no question there. Now, how deep of a breather would that be? Will it push all the way till here, 37.80? That remains to be seen. But my understanding is that if it clears the 50, then very likely it's going to test this 38.92 to 3900. If that clears, very likely it'll push into 39.16. This is on the ES side of things. And obviously, SPX is about 30 points, roughly 30 points. The number is 30 points behind ES. So 39.16, 39.20 area for SPX, that would mean 38 to 80, 38.90 area for SPX. So that's the reason I was looking forward for that 38.70 call yesterday. Right. And then we'll go on SPX in a bit. But for now, let's stick with the ES situation. Now, ES here it is on the weekly, it is still pointing to the downside, and we might get down to 37.35 or even about 36.62. This remains to be seen. This remains to be seen. For now, what we are looking at is a weakening dollar because of the Bank of Japan. What happened with Bank of Japan? The yen is strengthening, obviously the dollar is weakening. So I don't know if this story is going to be a temporary story, but for now that's where the sales are. That's where we are heading, and that's how we are trading. Now to the upside, right? If it pushes to the upside, then we still have to deal with the mean on the week 39.15, and this is the reason I was looking at 39 around 39.15, 39.20 as a pretty decent reject area, or rather resistance. That clears 39.20, that clears about 39.36, and beyond 39.36, around 39.36, 39.40, beyond that number, it is going to be a Santa rally. Till here, I think there is a pretty decent chance of it happening. But beyond this, this would be considered a Santa rally. Not sure if that's going to happen, but if it does happen, this is where you cash probably move into 39.85 or even could potentially test about 40.31. That bill, that omnibus bill that is being pushed through the Congress right now, I don't believe that is priced in yet, and it's a huge number, 1.7, and that will take a bit of time to work its way through the economy. And I don't think that that number is still priced in. I think there is still chance for that bill to be signed, or some news to come out of that bill, and there's a pretty decent chance that SPX will actually come back up and test this number 3920 to 3940 area. There's a chance of that, but obviously that's a bigger picture. We again, given the circumstance, I don't want to this is the strategy, right? So if I'm a strategist, I would be looking to play to the upside 4092, downside 3650. Pretty much this is how I will build my strategy around, right? And I would be trading, because we are day traders. This is what we're going to be trading, right? If it breaches below here, then it's going to go down to this number, 3874, another bounce, and then very likely push into 3872. This is how we want to be trading it. Um, right. As expected, it's taking a breather, and the breather very likely will push into 3875. That breaches, we'll look for a bounce around 3874 area. Cool thing. Again, this is all good, well and good. This is where the real action is. So now there are a couple of forces here, and this chart still doesn't make sense. I mean, of course, this chart makes sense. We can see that it's still 8 below 21. Then we can still see the RSI and the Williams are all the way down here, and SMI and the SMI here. Both of these are getting into that oversold territory where they want to bounce. This is a DXY chart, and if you are looking at the histogram here on the MACD, it is giving us pale red bars. That means selling is subsiding, right? So gotta keep all of these moving pieces in mind. And why is this important? Because of the actions by BOJ, and if the yen strengthens, then very likely, or rather, if so the way it is going to work is if yen strengthens, then you'll have other Asian currencies strengthen. That would weaken the dollar. That's the theory here, right? And if so far that's working out, and this is the reason that we have seen this push to the downside yesterday, day before yesterday. Now it's trying to recover here, and the technicals are on its side for at least a recovery, probably a mean reversion. It hasn't reverted to the mean. The last time dollar tested the mean was all the way here, back in November, right? November 22nd. It's been a month. So mean reversion needs to happen for dollar. It's been a while. So I'm looking for, again, the same exact thing. Right now, till now, it has been below 5 and 8, and this is the chart that I want to be focusing more today. Obviously, Apple is another one, but DXY and 10 year. So I am focused on these two charts. And if I see DXY moving higher, come back up to the 5 again on the daily, clears the 5, again hits the 8. If it clears the 8 and looking at Bollinger Band 104.73, that clears the mean reversion will complete around 105.10 as of now. These lines are again dynamic. Yesterday, the mean was here about 105.12. Day before yesterday, the mean was at 105.30, 105.35. So that mean is dropping pretty decent here. So even if we have a mean reversion about 105, 105.5, that's I think it's due for a mean reversion. So let's watch that. MACD is also trying to cross to the upside, and it's been giving us half cycle. SMI has been giving us half cycles here. So I think it's time for a full cycle on SMI as well. So watching that trade DXY very closely, 5, 8, and going into holiday weekend. I want to be very cautious about things here. I don't know if Friday is going to be a dump day, but I want to be really cautious about it. And same thing, just like yesterday, if it's going to be a range bound day, and then I would be looking to play just that 15 to 20 points bounces and push downs, not any major positions, right? So, and even if you take a major position because of that tight range, and because of those expected bounces and expected push downs or expected resistances, you can still take a big position and be very conservative about your exits, right? We don't want to, let's say if we are looking at technical, say that we are looking at a certain number that a stock or SPX or XYZ is going to hit, um, but we but I will not wait till that number gets hit. I would exit the trade probably right before that number at any given. And let's say, for example, in this case, if I were to be looking for a mean reversion, right? So I will not wait till it hits the mean. I'd probably exit right about here at the five. And if it clears the five, then I'll take another trade till eight. If it clears the trade, and then I'll take another trade till the inner Bollinger Band. Then I'll take another trade for the mean. That's how I. And again, I will not be waiting for the mean to get tested. Probably I'll exit somewhere about here, right? And if it hits the mean and clears the mean, then I'll take another trade for it to go up to 21. So that's the way I will be trading. And then I think that's a prudent way of trading things, given the market conditions. Let's get into another chart here, 10 year. So before we get into 10 year and this chart, let's stay on this DXY and get into monthly chart. So this chart, I'm still waiting for MACD here. I'm still waiting for the MACD to cross. SMI has crossed, and this is a good thing. And what does that mean? This is what that means, right? SMI crosses and it takes all the way down. These are just cycles, the same cycle, right? Up and down and up and down, same cycle. That's how exactly it works. Up and down and up and down. So now the thing that we want to figure out is whether it's going to be a full cycle or a half cycle. The SMI has definitely crossed, so very likely I think it's going to test probably 102.39. The sooner it happens, the better for us. If it doesn't, look at the RSI. It's a monthly RSI, and that's actually dropping here, right? So and looks like it wants to bounce, so that the weekly technicals get resolved. Then probably after that bounce, then probably it'll come back down into 102.30. Even 101.60 is a good possibility here. So so very careful here with what we're doing with DXY. We might see a bounce based on the daily chart, and the bounce very well could last potentially into 104.57, 104.60, and the 5 is detached even on the weekly. So if it runs up into 105.13, that's again a possibility here. Right, so keep a close watch on DXY. And again, the same cycles on different time frames. If it crosses to the upside, then we'll get a bounce. Probably first thing here, 104.52 that clears, then 105.13. Right now, and again, this thing is still crossed. 8 below 21 is still crossed. Keep a watch on that. Let's get into the 10 year. The 10 year is the same story. Yesterday we were looking for a bounce. We got that bounce. The expectation from bounce was all the way here to 3.75. Did not happen, but I think if it does bounce, then there is still a chance of 3.75. And let's look at the data here on the same data on the monthly. And monthly chart is still suggesting a downside here, right? A downside here. So let's see if it can come back down here at the 5, 3.53, and we'll look for another bounce there. A failed bounce will push all the way into 3.30. Of course, this is not today's story. 3.30 is not today's story. This very likely will happen probably, I don't know, sometime next month or something. December hike, sorry, December is done. So January doesn't have a FOMC hike cycle. Then I think February has another hike cycle. So I think till that time, barring any unforeseen moves from any other central banks or whatnot, I think we are still looking for this to push down into 3.30. Of course, this is a bigger picture, not the story for today, but keep this in mind. Let's go into week. If it starts to reverse and starts to come back down, 3.61, and if that breaches, very likely 3.53. If that breaches, we're looking at probably 3.45. This looks like more of today's numbers, and that to the downside, and to the upside, if it clears here again, the test of 8 at 3.66. If that clears, probably 3.74, 3.75. Right, and let's get into the daily. So daily, if you're looking at the green line, the average RSI, that is still pointing to the upside, but the regular RSI, it is hitting a top and coming back down. So we want to watch this thing coming back down, perhaps into the 21 here, 3.61 for another bounce. If that breaches, very likely here at about 3.59, and after that, the mean reversion probably at about 3.57. Not plotting anything below 3.57, 578 as of now for 10 year. It should act as pretty decent support. And the other reason that I'm not plotting below 3.57, of course, things can change. But if you look at the MACD here, this will support it. If it comes back down to the mean, there's a 100 moving average, there's a 8 moving average. So algorithms will hold it here, right? And 10 year is not traded by retail, so very likely this will be the technical bounce either right about here at the 21, or very likely a bounce around the 8 and the mean and the 100 moving average about 3.57, 3.58. So watch this trade here. If it breaches there, then very likely we're going to push probably into 3.53. I'm doubting it will go below this right here, because we still have MACD crossing to the upside. Of course, it doesn't make a trend just a couple of days, but still worth watching. Let's get into VIX. VIX is cratering. VIX is cratering. I don't know if it's a good thing, it's a bad thing, but seems like nobody is really looking to buy any protection. Uh, Maybe there's no event that the market participants right now, they are not seeing anything as a potential instability inducing event. China is opening, and even though China is suffering from COVID outbreak, but the official numbers are different, and we go by the official numbers unless unless those numbers are actually unless those unofficial numbers actually start to seep into earnings and numbers, the balance sheets. We don't really care much. We go by what the government is saying. Until we start to see what is happening in the real outcome of the events going on there. Shanghai looks like it's in a private lockdown. So but unless it starts showing up in the balance sheets, we don't really care much. Going by strictly going by the business perspective. Of course, we care about the people. COVID is a bad thing, people dying is still a bad thing, all that. But coming back to business perspective, we don't really care much about what exactly happening is on the ground, and until that seeps into the numbers. With respect to VIX, even with this spike here, right? Even with this spike here, a couple of days back, you can clearly see that this 8 and 21 are still crossed to the downside, right? 8 tried to cross to the upside, but was not able to cross to the upside. So we still are in this 8 below 21 phase, and very likely we want to see it 2037. That breaches, I'll look for a bounce around here, 1980. And I'm still thinking that because of this RSI, average RSI, green line still pointing down, will still push to the downside. Very likely first bounce right about here, 2033, 2030 area. If that breaches, very likely 1980 area. Should this take this path, should VIX take the path to the downside, obviously the market is going to pump a little bit more. Right, let's go into Right. So my understanding is that last time it bounced here, and that's a long-term support area, but that did not bounce off of a good technical level, and it just bounced off, I think previous lows or something like that. We still have room till 1830 on the weekly. So on the daily, we are still looking at around a bounce, probably an ephemeral bounce, 2030 area, 2035 area probably. And if that breaches, very likely 1980 area. And if that 1980 if breaches, then you have 1840 to deal with. And if VIX takes this path to the downside, very likely SPX will move to the upside. Right. And let's get into Apple. 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 This chart it still looks like this is if the earnings miss, then very likely it's going to push all the way down here into 113. That's a separate story. Probably short term end is about 124. That is again a bigger picture, and probably 138 to 139 is the upside. That's a bigger picture. 138, 139 upside. Probably the downside is 127, 127.50. That's the downside. But here's the trade that I'm watching. If Apple starts to push based on the technicals, look at the Williams R. It's pulled all the way down here, and look at the RSI. It's pulled all the way down to the bottom of the range. So technical bounce is there. Technical bounce is there. I don't know when that technical bounce is going to come, now or probably next week. I'm not sure, but the technical bounce is somewhere about here. And if SPX, look at the SPX, it has detached from its five all the way. Five is sitting at 135.30 or something like that. Let's round that up at 135.50. So let's say if Apple comes back up and pushes all the way into the five, there are bright chances of that happening because of the RSI and Williams R. Just the SMI needs to cross to the upside. SMI has pulled down way below here. Uh, and in the recent times, it has done that probably here in September, right? And that lows usually start to pull to the upside. So I'm still hopeful for a pull to the upside in for Apple. If Apple takes if Apple starts to push to the upside, very likely we'll see the five on the daily get tested. If the five gets tested, obviously you'll have a short getting trampled on, and the short covering will come into picture, and very likely we'll have a pretty decent size rally on our hands. And all that depends on Apple, and technicals are suggesting that there is a push to the upside coming for Apple. Now, when is that push? How big of a push? That is all remain that will all play out in real time. But this is how I'm looking at Apple. Potentially 135.50. Right. And let's go Apple here. Right. So Apple is taking a breather right now, and it's getting so same things, same exact cycles will play out, getting oversold. And if you look at this thing, this is where you want to place your trades, look for an exit or look for an entry, whatnot. But this is what you want to see to make your case whether it's going to go up or down. So yesterday I was wanting this line here. The MFI is all the way down here. MFI is all the way down here. This is just how the cycles work. MFI whenever it goes down, it will be it will get pulled up, and that's just how the algorithms function. And this we are not the only ones that looking at this data, right? Everybody else, or potentially a lot of people are looking at the same data. They are looking at the same MFI, and algorithms are of course looking at the MFI all the way down at the bottom of the range. So it'll start to buy in and start to pull up, and this thing starts to move up, and you can figure out the velocity of the move looking at the lines here in the SMI, right? And the SMI, the moment it starts to cross to the downside, again, we'll have the same cycle. Apple here is doing its thing, five, and then if that breaches, then the eight. If that breaches, then we're looking for a test of the mean down here at 132.30, and to the upside about 133.50. So this is the range that Apple needs to deal with, unless Apple clears either of these numbers, either let's say about 133.50 to the upside or about 132.30 to the downside. So this is the range so far it needs to be in. And when Apple clears one of these boundaries, either to the upside or to the downside, we will reassess the situation and probably plan accordingly on our SPX trade, or at least on my SPX trade. But Apple, if it clears here, 133.50, very likely a breather here. If it clears there, then very likely 133.99 to 134. That clears about 134.40 and about 135. There is a clean path to 135. I think, but the technicals are slightly overbought here, right? Slightly overbought here. RSI is still not overbought. RSI still has room to the upside, but the technicals on the SPX are still not in agreement beyond that 3850. Let's get into maybe Tesla a little bit later, but let's get into SPX here. This is beneficial because I keep talking about SPX. SPX to the upside, 3892. This is a number critical. I think if it hits that, very likely it's going to take a breather. And I'm hopeful of this number getting tested today, 3892, 3900. If that clears, 3928 is the number that I'm watching. To the downside, we still have 3717, 3670. I'll be very surprised if it gets tested today. I'll be really surprised if that gets tested today. Let's go here, or even this month. If it gets tested even this month, I'll be very surprised. Right. So this is the chart that I was basing my numbers on. Right about here, this is the 38 20 38 15 line, and that 38 95 96 bounce was a technical bounce on based on lower time frame, 1 hour time frame. So let's say if it bounces here, then expecting it to hit this 3870 right here. So this is where I was getting my 3870 from, right? And very likely if it hits here, then we're going to see a breather, and there's a bright chance of that happening, because you can see the RSI down here. Same thing with major stocks, Apple, Microsoft, Amazon, and all of those. And obviously if Apple goes to 135, we'll see this happen in no time, right? 3870, this is the number where I think there's a bright chance of that happening. If that clears, very likely it's going to hit into 3880, very likely 3894. If 3894 gets hit, very likely the psychological number is 3900. Right now, I am not plotting beyond this number right about here, 3870. If 3870 clears, then we'll look for further upside, 3880 to 3895. Right. So yeah, a downside. There is more downside, but for now, I think in right about here. So downside probably, if it comes back down 3822 and probably 3795, 3796. Yesterday, this is where we bounced. And today, again, the same thing, 38, 3800, probably 3874, probably 3785. This is the downside, not plotting anything below that as of now. If anything goes awry and if Apple starts to push to the downside, then we'll reassess the situation for further to the downside. We still have 2 minutes. Do we want to go over Tesla, or that would be too quick? I think that would be too quick, but let's attempt it. Tesla, I still think that if the broader market rallies and if the selling from the institutions is done, probably there is a bright chance that Tesla will come back into 164 probably by the end of the month. For today, let's go here. This is the daily chart. Upside still remains at about 149.50 to 150. It's getting oversold on the daily. The technicals are suggesting a bounce, but the relentless selling, the whole Twitter thing, that's weighing on the stock. And I don't know if Musk is done selling or not. I don't know if institutions are done selling or not. But if it does, if the buying comes in, then very likely we'll see a push all the way up to 149.50 to 150. To the downside, we still have to deal with this number around the monthly super trend right about here, 131 to 134. So this is the range to the downside. Very likely it's going to get tested. I think if the selling comes in, then very likely it's going to get tested and we'll look for a bounce again here. Probably the bounce will last, I don't know, into the markets are open, by the way. Let's get into live trading.